The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Greetings, everyone. Good afternoon. Happy Thursday. It's Thursday, right? Yeah, it's Thursday. Welcome to another edition of Breakout Investing on TFNN. My show airs 5 days a week now on the network, 3 to 4 Eastern, just before the Tom O'Brien show. He's got 2 hours every day from 4 to 6. The number to use if you want to give me a call, talk about this rip-roaring market today, 877-927-6648. If you can't listen to the show live, you can check it out on iTunes. Not a problem. And feel free to leave a review if you'd like. And don't forget you can listen to all TFNN programming on your smartphone. Just open your smartphone browser, type in tfnn.mobi. Very simple. tfnn.mobi in your smartphone browser. Click Listen Live, and you can get the stream that way as well. Tiger TV on the homepage of TFNN.com, Channel 1. The show is carried live. It is archived in Channel 13 and, of course, Tiger TV. Not only do you get the show audio, but you can also look at charts as I am looking at them on my computer screen during each day's show. All right. Big day for the market here. We've got some more specifics about a new bond buying program from the European Central Bank about a month ago. President Mario Draghi didn't have a whole lot of specifics, but he was a little more specific this time around. He launched a conditional, quote, outright monetary transaction plan, basically just a bond buying program, but the ECB is not going to act until a country applies for the plan. There are some conditions on the program, but no limits on the size of the program, so I think the market liked that. And the ECB going forward will buy bonds with maturities of 1 to 3 years. They didn't do anything with interest rates. They left their benchmark interest rate alone at 0.75%. No big surprise there. There might have been a handful of economists that were expecting a lowering by 0.25 point, but interest rates stay where they are in Europe. But specifics about a bond buying program, well, the market likes what it hears. Here's a look at the S&P 500, up close to 27 points, 1.9% today to 1430. Technical breakout here over a swing point of 1426. So it is about 4 points above that swing point. Got a little bit of juice behind the move today. New York Stock Exchange volume on Wednesday was pretty much average at 671 million shares. We're tracking about 15% higher than that today, 770 million. Looks like we will come in close to that level. And let's take a look at the NASDAQ Composite. It is also having an outstanding day here, outperforming 62 points, 2% to 3131. Breaks out over a swing point with conviction, swing point of 3100. So good technical breakout for the NASDAQ. Quite a bit of juice in the NASDAQ today. The volume yesterday on the NASDAQ was slightly below average, 1.46 billion shares, tracking about 30% higher than that today. So we could see 1.92 billion shares on the NASDAQ today. So, yeah, hearing some people talking about a lot of euphoria in the market today. I don't know if I would call it euphoria. What it looks to me is like there's been a lot of money still on the sidelines that is coming in from the sidelines today. There's a lot of good action out there in growth stocks that I follow. The Ultimate Growth Stocks model portfolio is outperforming nicely. I've got several names in there that I've owned for several weeks now that are really starting to ramp up here. If you want to get a 30-day free trial to Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. Click on the newsletter tab, then investment newsletters. You can also check out 30 days free by just looking in the carousel, Ken Shreve's Ultimate Growth Stocks. So be sure to check that out. I think I'm positioned pretty well here. But yeah, great day for the market. We don't check on the NYSE composite very much, but this is a broad-based index, and it is also looking pretty strong here. Don't quite have a breakout yet. I don't think. The NYSE composite right now up 1.9% to 81.46. The swing point for the NYSE composite is 81.60. So it's still about 14 points underneath that swing point right here. But, make no mistake, this is a bullish day for the market. Of course, we've got some major league headlines coming up over the next several days, including the August employment report tomorrow. Right now, economists are looking for non-farm payrolls to rise 130,000. That is on the heels of, 163,000 job growth that we had in July. April, May, and June, the economy created less than 100,000 jobs. So we got a good number in July. Let's hope we get another good number tomorrow. Again, the estimate is for job growth of 130,000, with the unemployment rate holding steady at 8.3%. A lot of headlines around Amazon. They're in Southern California. They started their press conference just maybe hour ago, something like that, down in Santa Monica, about a half hour from where I'm located here in Los Angeles. But shares of Amazon up $4.78 today, 1.9%. to $251 a share. They unveiled a host of new products today, including the Kindle Paperwhite e-reader with a new lit screen, 7.5 ounces, only 9.1 millimeters thick, and an 8-week battery life. The Wi-Fi only version is going to be priced at $119, 3G version at $179. The price of the original Kindle reader is going to drop to $69, but the new Kindle Paperwhite e-reader will ship on October 1st. We also got to look at the new Kindle Fire tablet called the Kindle Fire HD. It's even thinner than the Paperwhite. The Kindle Fire HD tablet is 8.8 millimeters thick, weighs 20 ounces, can be priced at $159, and Amazon claims that its Wi-Fi capability is 41% faster than the iPad. So some new products coming out from Amazon today, and I got to tell you, innovation in tech among these big, large cap names, whether it's an Amazon, Apple, eBay, never, ever underestimate innovation. When you're looking for stocks to buy, you really have to make sure if it's a small cap stock, a mid cap stock, a large cap stock, make sure there's innovation going on. I know there are a lot of investors out there that think they own innovators, and innovation is about top line growth, bottom line growth. Amazon has not had a problem delivering excellent sales growth in recent quarters. They aren't making money on these Kindle tablets yet, so they're sacrificing profitability in recent quarters to expand their distribution network, and the street knows that, and it's okay with that. But generally, innovators are going to show not only top line growth but also bottom line growth as well. So just very impressive, the innovation that's been going on at names like Amazon, Apple, and eBay, and a host of other tech names out there. So check in on shares of Apple today. You think that these new product announcement from Amazon would be weighing on shares of Apple, maybe competition concerns for the iPad, but not so much the case. Apple lagging the market a little bit here today, only up 1% to 676.72. There's a story in Bloomberg I saw earlier today that not to expect Apple TV this year due to tough negotiations that Apple is having with media companies and cable television operators. So little small headline from Apple there today, but stock, again, up 1% today. And financials also participating in the market nicely today. Let's take a look at the Financial Select Sector SPDR ETF. Good technical breakout for the XLF today, over 1538. It's still hanging in there, not extended by any means. Remember, you never want to chase extended stocks. You don't want to buy a stock too late. I don't think you're chasing the XLF if you're buying today. You've got decent volume in the XLF. It's only 10-11 cents above that swing point of 1538. It's up 2.2% today to 1549. Top holdings of XLF, of course, we've got Wells Fargo. Going to see some nice gainers here. Good heavy volume breakout for Wells Fargo today. The stock is up 3.1% to 34.79. Other top holdings of the XLF, of course, JP Morgan. Check in on shares of JP Morgan. We'll see that it is up 4.2% to 38.67. Citigroup and Bank of America as well. Top weightings in the XLF. Shares of Citigroup up 3.9% to $30.93. And also Bank of America up 4.3% to $8.30. So, you know what? You just listen to the market, watch the market. If the market tells you to buy, you buy. If the market tells you to sell, take partial profits, full profits, you do that. This is a bullish day for the market, no matter how you slice it. Going into today, I had been saying that the market had not been doing anything wrong. I really wasn't seeing much in the way of sell signals, not only in the major averages, but leading stocks were, holding gains, not doing anything wrong, and that I was going to stay long for as long as the market told me to stay long. So we'll see. We'll see how things play out tomorrow. We've got the Fed meeting next week. September, I'll get it right. Next week, Fed meeting, September 12th and 13th. So a couple more pivotal headlines for this market to deal with, but good solid day for stocks today. Let's take a look at some movers out there. I'll take a look at Rackspace Hosting. This is a provider of web hosting services. This has been just a massive gainer during the month of August. It was a $42 stock, $43 stock at the beginning of August. Now it's up around $63.62. I am not a buyer of this stock up at its current level, but I'm going to just take a look at a weekly chart here for Rackspace Hosting, and what I would like to see this stock do is form a little handle area here. This means it could, from its current price of 63, maybe correct down to that 60, 59, 58 level in low volume, form a little handle area, and then attempt another breakout. But after, 8 or 9 weekly price gains in a row, definitely extended here. It did recently break out over 60, but I'm not going to buy a stock after almost 8 straight weekly price gains. So we get a little pullback in Rackspace, maybe a handle area forms in light volume, and then if a new round of buying comes in, then we'll maybe consider this name. But definitely showing price strength in this market, as are a lot of different stocks and a lot of different industry groups, financials participating today. That's for sure. So, all right, folks, I'm going to have my friend Keir McDonough on, not the next break, but the break after that. So we'll be back in about 3 to 4 minutes. And thanks very much for tuning in. Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Coming up just past the bottom of the hour, my former colleague, partner in crime, Keir McDonough from Brigos Capital in Beantown, Boston, Massachusetts. He's a portfolio manager for Brigos Capital Management. Look forward to talking to him about this market. Meanwhile, let's take a look at the CBOE Volatility Index. The VIX getting thumped today, down 10.5%, $1.87 to 1587. The VIX briefly tried to get back above its 50-day moving average, reversed earlier this week on Tuesday, fought its way back yesterday after early losses, closed up near its session high, still lower on the day, but taking a hit today on a strong day for the market. The VIX down 10.5% to 1587. Not much movement in the U.S. dollar today. Interestingly enough, you'd think that with a strong day for the market, U.S. dollar would be much weaker, but that is not the case. The U.S. dollar index recently trading around 81.08, down 16 ticks or so after hitting an intraday high yesterday of 81.67. The dollar finished near its session low at 81.24. So it's under a little more pressure today. 81.08, last quote for the U.S. dollar index. Its 200-day moving average is 80.64. And as you can see from this daily chart of the U.S. dollar index, it is not too far from that longer-term level of support. Crude oil today, not much movement, up 0.2% to 95.53 a barrel. Gold, December gold specifically, up $11.60, 0.7% to settle at $1,705.60 an ounce. In the oil space, I mentioned oil closed today at 95.53 a barrel. Not seeing, I don't have any oil and gas exposure in my Ultimate Growth Stocks model portfolio. Not seeing a whole lot in that sector that looks appealing. But I'll take a look at a couple of names here. Let's start with Oceaneering. This is a services firm, OII. And, kind of an ugly day of price action today. This one looks like it's forming a handle area in a cup with handle pattern after hitting an intraday high of 55.65. Was looking pretty good, looking like it was going to try to, take out a swing point at some point in the near future, but it has reversed. It is now at its session low, still up 42 cents, 0.8% to 54.48, but still well off its session high of 55.65. Let's take a look at a weekly chart for Oceaneering, and we'll get a better look at this. Really, what looks like a very symmetrical cup with handle pattern here. You can see the base that started earlier this year, January, February, comes down, works its way higher, and then you've got a little handle area firming up at its 10-week moving average. So not a great day today because the stock has reversed and is near its session low, but there's still a pretty easy swing point here to see a 56.45. Nice handle area forming. Can't entirely rule out a breakout for Oceaneering, but again, I'd rather wait for volume to come into the stock, wait for it to take out that 56.45 level in a big Russian trading volume. Then you've got a heavy volume breakout, signs that institutions are buying. Until that happens, just better off to just watch and wait for that scenario to play out. Chart Industries, also in the oil and gas sector. This is an equipment maker, looking at a swing point here of 74.47. 74.47, that would be the high point right here. Stock is outperforming nicely today, up 4.7% today to 72.45, trading in the upper half of its trading range. So again, watching a swing point of 74.47 for Chart Industries. Very good growth prospects at Chart Industries. I think this is one where annual earnings are supposed to grow, I think 47% this year, and another 47% in 2013. This company makes equipment used in the production, storage, and use of hydrocarbon and industrial gases. So Chart Industries looking interesting here. Let's take a look at a couple of earnings reports here. Men's Warehouse, decent day for the stock, actually a little more than decent. Big gap up for Men's Warehouse. Stock is up 16.8% today to 37.18. The market clearly liked the company's earnings report, even though that's not a company that's growing that quickly. Earnings were up 4% from a year ago to $1.15 a share, a little bit above the consensus estimate for $1.12. Sales were only up 1% to $662.3 million. That was mostly in line with expectations, but buyers in Men's Warehouse in spades today. Stock is recently trading around 37.18, up 16.8%. All right, folks, headed into our second break. Joining me next, my good friend Keir McDonough. We're going to talk to him about some recent new issues and this overall market. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. 25 minutes left to go in Thursday's session. Let's get a quick check on the markets here before we go to Keir McDonough in Boston. Right now, we've got the Dow slightly off its highs for the day, but still acting very, very well here. Up 231 points. 1.8% to 13,278. Tech stocks outperforming. NASDAQ up 64 points. 2.1% to 3133, and the S&P 500 up 27 points, 1.9% to 1430. Bullish day for the market. We've got a little juice behind the NASDAQ at last check. Volume tracking about 30% higher than what we saw yesterday, which could bring us into 1.9, 2 billion shares on the NASDAQ today. Volume on the New York Stock Exchange about 15% higher than what we saw yesterday. That would bring us in that 775 million area. So good day of accumulation. We're joined right now by former colleague of mine, Keir McDonough. Keir and I used to do advanced investment workshops at Investors Business Daily when I worked there for quite some time. Keir is now in Boston. He's a portfolio manager at Breakout Capital Management, and this is a long-short equity fund that focuses on growth names just like I do. You can follow Keir on Twitter at Keir, KIERMCD, at Keir MCD, and his website is breakoutcapital.com. Keir, how you doing today, buddy?
Pretty good day, Ken. How about yourself?
Pretty good day. We've been waiting for a day like this, in recent days on my radio program, just talking to listeners about the fact that leading stocks haven't been doing anything wrong. In fact, they've been holding gains nicely. And for that matter, the technical picture of the market was actually looking pretty darn good headed into today. Would you agree with that?
I would agree. A lot of the choppiness that we saw in the early part of the summer went away last month. We really began to calm down. The market began to tighten up, and we saw a lot of leading stocks begin to emerge.
Yeah, absolutely. And so we got good juice on the New York Stock Exchange today, good volume on the NASDAQ as well, tech stocks flexing their muscle. I had a question for you. The market has been in an uptrend for quite some time. When was it that we saw that sign of strength in the major averages? This was back in July, I think it was, right, when we got that sort of like that IBD follow-through day?
Exactly. We had a big update on the market. I think it was roughly about 1.7%, and the volume was heavier than normal. So we saw an institutional confirmation of a change in trend.
So if we get this confirmation of an uptrend back in July, we got more strength today. How long? If people are still sitting on the sidelines in cash or are under-invested, because there are probably still people in that situation, unsure of this market, untrusting of the market.
Sure.
How long do investors have to put money to work? I mean, is it too late now? Do they have several more weeks? How should people thinking about putting money to work here? How should they be thinking about it? Not too late, I assume.
At this point, no. I don't think it is too late. We're still seeing leading stocks breaking out. We're 10, 12 weeks into this move. Most of the leaders tend to come out during that time frame. But I think if you go through on a stock-by-stock basis, no one knows how long this trend is going to last. Is it going to last another 2 weeks, 5 weeks, a month, 5 months, a year? No idea. But right now, the market, especially with the action we're seeing today, on big volume and a lot of stocks acting very, very well, I think you kind of begin to dole some money into the market if you've been sitting on the sidelines. Which brings up an interesting point. I think sentiment towards the market has been horrible over the last several years. Outflows from mutual funds, especially from equity funds, have been, especially in July, they really peaked out then. So I think people are underinvested in the market.
Yeah, no doubt about it. So you talk about a lot of stocks acting well today. What are some names? What are some names you're watching here? What stocks are really kind of on your radar here that have the look of emerging leaders? Stocks that still could be in the early stages of a nice move here.
Sure, I'm going to jump to one you were talking about earlier in your program, Amazon. The giant
Amazon
online retail service company, 40% annual growth for sales over the last 3 years. They announced their new Kindles today, which you mentioned. But I want to talk about another area that I think could be very interesting is their Amazon Web Services. And what they do is they rent data storage and computer server time directly to businesses, individuals. And Jeff Bezos came out and said, so basically it's cloud computing. They think this could be larger than their existing business, which was $50 billion last year.
So that business that Amazon is wanting to get into, they see good growth. I mean, this is a similar business, I assume, to a company like Equinix, EQIX on the NASDAQ.
It's similar. It's data, maybe more like a rack space, but it's data storage. The interesting part here is margins on storage is actually better than what they get on the rest of their businesses. So it would actually be an uptick.
Yeah, yeah. Well, it's interesting. You got the top line growth at Amazon, and I mentioned earlier in the program, I mean, it's not like you're seeing a company that's showing great earnings growth. They've sacrificed earnings growth in recent quarters to concentrate on other business initiatives. And, and the way that Amazon has been trading, just another large cap tech name that is not doing anything wrong here. I wanted to ask you, Keir, about online real estate firm Zillow, because there are a lot of IPOs acting very well here, but Zillow technically has not broken out yet. It's come back to life. They announced a share offering last night.
Yes.
Stock was lower in the aftermarket, but this thing's acting pretty well today.
It really is. New issues are kind of the lifeblood for the market. They also show the animal spirit, if you will, that people are willing to put money into newer ventures. Zillow is the leading online real estate website. Right now, real estate is really beginning to turn the corner. But what I like about these guys is they have a mobile product, which is really taking off. And basically, real estate agents spend about $6 billion per year in advertising, most of it offline. Zillow has about 1% of the total. So these guys are a category killer for what they do.
The stock has come up hard off its low set about mid-August or so. It was a $36 stock, and it's at $43.70 right now. Looking at from the chart that I'm looking at in Tiger TV here, you're looking at about $44. That's going to be the swing point, the buying area.
Sure.
And there's good volume in the stock today. So this is an example. We've seen a lot of breakouts recently in IPOs. Annie's, BNNY had a good breakout recently, but some are still kind of simmering on the stove here, like Zillow. So
one of the things I like about it, Kenny, is earnings should be up 220% this year and 128% next year. There's only a handful of companies that I see out there that have triple-digit earnings.
And a really good CEO too. I know the CEO's got good pedigree. I believe he came from an online travel firm, Expedia. He was with Expedia for a little while, and never underestimate good management. What else in the IPO? I'll tell you what. Let me ask you about. I know some people that have been taking profits recently in Michael Kors. It's been going gangbusters, but to me, this looks like a stock that is not doing anything wrong. Kors is a current holding in my Ultimate Growth Stocks newsletter and model portfolio. I've got a nice gain in it. I got to tell you, I'm in no rush to sell this thing. What's your take on Michael Kors?
I like the story quite a bit. In fact, I went back and did some history, some historical perspective, and I found one from the 80s, Liz Claiborne, which was a big retail stock. And the stock essentially went from $1 to $44 over about a 5-year period. Kors is setting up the same way. It just set up a 6-month base, just broke out of it. It's been up 5 weeks in a row. Earnings last quarter up 162%. You wouldn't even know there was a recession anywhere in the world. These guys are really killing it right now.
Yeah, and actually business in Europe still holding up pretty well, if memory serves. I think they're...
Very much so. I mean, they've had 25 straight quarters of positive comps and 9 straight quarters of 35% plus comps. They've got about 253 stores. They should be able to triple that over the next several years.
I was talking to a buddy earlier today, and I was looking at a weekly chart for Kors, and I was talking to him about what these tight weekly closes mean. You go back 2 weeks ago, and then last week it showed a tight close, and I was really telling him, I said, I really hope this thing does not try to break out anew over 55, because I'd like to see just a good solid 3 weeks tight pattern put in here, and maybe add to the position next week. But it looks like it's making a move over 55 today as we speak, up about 4.5% to 55.33. So okay, Keir, before I let you go, one final question. People that are underinvested in this market, people that want to put money to work, number one, it's not too late. We still have time here when indices are breaking out in heavy volume. That's worth paying attention to.
Yes.
What is the what's additional advice you would give to people that want to put money to work? Where should they be looking?
I think you want, as you're putting money to work and you're making some progress in the market, that's your sign that you're in sync with the market, and you can begin to force feed some more money into the market.
Don't average down. Find stuff that's working. If you buy a stock and it's doing what you thought it would do, average up. Keep your average cost basis in check. Pretty much
Absolutely.
got it? All right, good deal. Kier, thanks very much for coming on. Again, folks, you can check out brigoscapital.com. Kier's a portfolio manager for a long-short equity fund there. You can also follow Kier on Twitter at KierMCD, KIERMCD. Kier, have a great rest of the day, and appreciate you coming on.
Thanks, Ken.
All right, take care. All right, Kier McDonough, a similar investing style that I have. We both like to look at growth stocks, and it was nice to get his perspective on the market. Mentioned earlier in the show that some people talking about kind of a euphoric day in the market, and again. It may be a little bit of euphoria. I mean, anytime you see these growth stocks up 3, 4, 5% in one day, there might be a little euphoria there. But have to keep in mind that there's a lot of money on the sidelines still, and I think it's important to keep in mind that today is probably not as much short covering as you think. I think the shorts that have covered have been doing it for quite some time now. And I think that this is new institutional money, new fund managers putting money to work, and looking at bonds and the way that the bonds are selling off today, and yields are going higher. Here's a look at the TLT, the iShares Barclay 20-plus year Treasury bond fund. It's down 1.6% today to 124.64. You see in recent days it tried to get back above its 50-day moving average here, was turned away. So this is another situation that possibly bodes well for continued strength in the stock market. If money continues to come out of the bond market, a likely home would be in stocks. So this rally could have a little more left. It's not to say that we won't see some profit taking and some selling in the market. Again, a lot of it's going to be predicated on what the jobs report shows tomorrow. I think with the market acting the way it is, I think it's possible that we'll see a number better than the estimate right now for 130,000 jobs. And, I think that the market is generally going to like what it hears from the Fed in the September 12th and 13th meeting next week. So the pieces seem to be in place here for more strength. And, again, I think it's important if you're under invested or if you're not trusting of this market, it is important to kind of just listen to what the market is saying. They say never short a dull market and never short an uptrending market. So but I still think that there's a lot of good action out there, a lot of stocks acting well, and that is important. Let's take a look at some other gainers today. I want to take a look at Commvault Systems, CVLT. This is a maker of archival storage management software. This is setting up in a base here. It has given back some of its gains today after hitting an intraday high of 53.67. It is now at 52.46. So not great price action today. It's kind of flirting with a breakout here over a swing point right around 54. So it's got about a point and a half to go to get there. Trading near its session low. Let's take a look at a weekly chart for Commvault Systems, and we'll see a nice little base taking shape here. Swing point of 53.80. The one thing you want to keep in mind is that even though a lot of leaders have already come out, and usually the first out of the gate tend to be the strongest stocks. I mean, there is something to be said for that. And you have some bases setting up now that arguably, could be considered laggard breakouts. So you want to be very discerning when you're looking at bases that are setting up right now. Make sure it's a cream of the crop company. Commvault is a good, solid company. Whether it's best in breed in its industry group, that may not be the case, but still a decent technical setup here where it would be prudent to watch for a heavy volume breakout over 53.80. Another small cap name that is acting well here is Allot Communications. They make network optimization products. It is acting well here. Swing point of 28.08 for Allot Communications. It is at 27.05 right now, up 3.7% on the day. So could see a breakout here as well. Just make sure there's a lot of volume coming into the stock at the breakout. Thanks again to Kier McDonough. Folks, we're headed into our final break. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing, talking about some of these new issues that have really come to life. Shares of LinkedIn, excellent follow-through today after a breakout yesterday, over $113 a share. Shares of LinkedIn up another $6.34 today, 5.6% in a strong volume to 119.62. Don't look now, but LinkedIn getting very close to its all-time high of 120.63. So this is just the type of action that you you want to see when the market is flexing its muscle. You want to see leading growth stocks flex their muscle as well. So LinkedIn performing quite well here. Did you see that raised outlook from Magic Jack Vocal Tech? This is a speculative name. There's no doubt about it. It's been up for several days in a row, but they did significantly raise their earnings guidance. The stock is up 4.7% right now to $26.63. $500 million market cap, a little bit higher than that. It's based in Israel. A lot of innovative tech names in Israel these days, but they're a provider of internet-based phone services. They raised their full-year earnings forecast due to strong sales of its new Magic Jack Plus product. Stock is under accumulation here. It has been for quite some time. They're now looking for earnings between $1.70 and $2 a share for the year, up from its prior estimate of $1.50 to $1.80. Analysts were looking for $1.53. So that is significantly raised guidance. But again, after I'd have to count here, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost looks like 11 up days in a row. I would wait for this to just kind of consolidate. I wouldn't chase it up here, but nice guidance today from Magic Jack. We did get some economic data earlier today. The August ADP employment report, private payrolls up 210,000. The estimate was for 145, 150, so that was significantly better than expected. July was revised higher to 173,000 from 163,000. Again, the jobs report comes tomorrow. August non-farm payrolls are expected to come in at 130,000, with the unemployment rate holding steady at 8.3%. Also, take a look at shares of Biogen IDEC, another solid performer today, up 3.6% to 152.01. Good volume behind the move today. Still no word on FDA approval for the company's oral MS drug BG12. This is, if approved, it will likely be a big revenue driver for Biogen going forward, but a nice flat base breakout over $150 a share. Hey, this thing's at $152, only $2 above the swing point. Definitely still within buying range, not extended in the least bit. Take a look at shares of NetSuite, another good setup in the market here. Another stock that's prepping for a breakout. I would rather wait for the breakout to happen before considering a buy here. NetSuite right now up 1.7% to $56.80. This is kind of a similar business to Salesforce, provider of on-demand customer relationship management software. We'll take a look at a weekly chart for NetSuite, another name on the radar here. And here we go. NetSuite reset its base count last year, so this looks to be probably a second stage base forming with a swing point of 59.22. Let's see if this one can muster up a breakout. Coming up after the close, a lot of people interested to see what Ulta Beauty has to say. ULTA, interesting setup here ahead of earnings. Stock is up $2.57, 2.8% to $95.49 ahead of earnings. Consensus estimate profit of 51 cents a share, up 34% from a year ago. Sales up 20% to $473.8 million. Folks, thanks very much for tuning in. Appreciate it very much. Coming up next, the Tom O'Brien Show on TFNN, 4 to 6 Eastern. I'll see you back here tomorrow for another edition of Breakout Investing. Take care.